Hey, good evening, everybody. I man, I had everything set up totally wrong. I'm sitting up here trying to figure out why it's not streaming, and I had everything hooked to a another stream that I had set up for like a tape reading session that I never did, and I guess when I copied everything over and tried to set it up, I don't even guess I know that's what I did. But good evening, everybody. Hopefully everybody doing well, man. I um I want to tap in with y'all. I ain't gonna be in front of you long. First of all, first and foremost, I just want to say face to face. Well, it ain't really face to face. It's kind of like I'm facing the camera talking into a microphone, and you either looking at your phone or you looking at your TV or computer or something like that. But this is about as close to face that we can get. And so I just want to say face to face to everybody. I appreciate y'all for your prayers and your um, kind words of encouragement. That's what I'm looking for. I wanted to come on and just kind of give y'all a lay of the land. It's the well, it's already started, but tomorrow is the last trading day of the month, and then Monday we have a holiday, so it's going to be a 3 day weekend. 3 day weekend. We got a holiday Monday. Um, I don't, I don't think, I don't think the market going to close early or anything like that. Um, I could check that real quick. Uh, yeah, yeah. You don't say nothing on there. Yeah, yeah. So it don't close early on that like that. So it's just Monday with the holiday, as far as I can see. All right. So tomorrow's the last trading day of the month, and I haven't been active for those who uh, don't know. The other night when we was doing our price action recap, my mom called me and gave me a bit of bad news. Somebody that's very close to me passed away, and so I just have been in the mood to live stream. You know, I really ain't even been in the mood to like really like trade and do stuff, but you know, the old school saying how people say life goes on and stuff like that. So we got to keep on keeping on. But and mentally, has it been like affecting my trading mentally? Yeah. You know what I'm saying? So I guess I just share, words from this experience, words of wisdom from this experience. If you ever dealing with something heavy, you know, might be a good time to push away, push away from the charts for a little while because it will affect you mentally, right? You got to be at a high state of readiness when you dealing with um pushing them buttons. Uh like I said, I haven't been doing any streaming. I reached out to the gang, and if you didn't see my post in the Discord, I jollifies, but I had reached out to everybody saying that I would not be live streaming no more for the rest of the week. That with tape reading with the diamond members with price action recaps, nothing. And tomorrow is Friday. Don't force it Friday. And then Monday we got a holiday. So we tape read on Monday, Wednesday, and Friday. Right. So um I'm not tape read tomorrow because I wasn't gonna do that for the rest of the week. I'm not doing a price action recap tomorrow. And then Monday is a holiday, right? So then that brings us back to Tuesday. Okay. Um Tuesday, uh I'll more than likely do a price action recap on Tuesday. Right. I'll more than likely do a price action recap on Tuesday, but Wednesday, I'm not doing anything on Wednesday. I know we got tape reading on Wednesday. I know we got our monthly lecture on Wednesday, but Wednesday is the date of the funeral service. All right, Wednesday is the date of the funeral service. We having the funeral service that morning at 11. Right, so Wednesday is the date of the funeral service. So um, I'm not doing that on Wednesday. So next week is going to be a sparse week also. I appreciate y'all understanding. Um, I know y'all get it. I know y'all understand. You know what I'm saying? Gang, gang. I know we like family, but y'all know me at the end of the day. if anybody got an issue with it, y'all know, y'all know me. Y'all know me at the end of the day, you know. But so next week is gonna be sparse also. So Tuesday, we will do a price action recap at 6. Wednesday, we're doing nothing. I haven't decided if I'm just gonna reschedule the monthly lecture for another day. I haven't decided that yet. Um, I'll reach out in Discord and let y'all know what my decision is. All right. Haven't just got if I'm gonna reschedule it or not. Because I know one time before I like rescheduled it and did it like on either Tuesday or Thursday because something was going on Wednesday. But we'll see. I'll let y'all know. I'll let y'all know. So and then we'll be back at it with the tape reading on that Friday, next Friday, which would be the 5th, the 5th of September. Right. And what else? What else? I had some notes. I wrote down some notes and I went through what I had on the notes, but I had something else. I feel like I'm forgetting something. Um yeah. Um as far as the market goes, I've been sharing my thoughts and the Discord with just a broad overview. Hasn't been really detailed. I just went in and said, "Hey, with this, man, why y'all didn't tell me I was out of focus?" I just went in and said, "Hey, looking at how the daily chart is moving, what we've said about the higher time frame, right? When does price invalidate this bullish Judas swing, and what's the reasonable target? Um, Either way, when does it invalidate this bullish Judas swing and become a wig snatcher? And what's your reasonable target for either scenario?" Right. That was what I shared um last night, I think. I think I shared it last night. And then today I shared When I said, hey, was the bullish Judas swing invalidated? Right? Was it invalidated? And based off what price did, what could you have used throughout the day to participate? Right. So I've just been sharing the same thing we've been talked about, right? Over and over, just watching what price is doing on the higher time frame, right? And then drilling down through the time frames to get the detail, right? Hopefully it's clicking for those that, at that point when they're about to get their aha moment. Hopefully it's clicking. Hopefully you understand price, how it's moving. Um Question for you all. I didn't share a screen. I didn't share a screenshot of this, but question for you all. Um, Today we created a inversion fair value gap. All right. Matter of fact, let me um let me pull up my trading view, and so you can see what I'm saying, because I didn't share a screenshot. Flash sales awaits. A unique opportunity to save up to 70% on your subscription has landed. Claim it now. Speaking of sale, I got an email. Apex been bombarding me today. They have a 90% off sale. It said it was for labor. I didn't open it. I just saw the headline. It said 90% off sale for Labor Day. Yeah, I think that's what it said. I just saw the headline, but 90% off for Apex. Now, if you feel like you're ready to try your shot at a prop firm, I got affiliate code for Apex in the description. Shout out to everybody that be using my affiliate code for Apex. I appreciate y'all. That Starbucks money be coming in handy. We created a daily. We created a daily inversion fair value gap here. If I go to a daily chart, right, if I go to a daily chart today, right, if you look, y'all remember the screenshots I had made, right? When I sent out the screenshot yesterday, I said, when does this, when does price right? I said, when I sent the first screenshot here last night, I said, when does price invalidate, right? This bullish Judas swing, right? Price went down, up, and it retraced back in. Say, when does price invalidate this bullish Judas swing, right? And what's the reasonable target for both scenarios, right? And so what I mean by invalidate the bullish Judas swing, when does it become a wig snatcher? And what's the reasonable target in both scenarios? So if question, if I said, when does price invalidate this bullish Judas swing and become a wig snatcher at this moment in time, what should you be looking for? Reasons to buy or sell? Hmm? Anybody? Nobody? All right, then.
Reason to
So,
buy is if it's in the discount of that range and if it respects that bullish fair value gap.
okay. All right. Appreciate you. Yeah. Cool. It was, yeah, hold on. Makes you sad. Really? Yeah. So, all right. So if you're looking at price and you say, hey, we've had a bullish Judas swing, right? So if we had a bullish Judas swing, until the bullish Judas swing is invalidated, right? You should be looking for reasons to either seek buying opportunities if you're trading, or you should be looking for PD rates that's going to support price, right? So what do we have in the sense of PD arrays that can support price? Okay. Now, whenever you know I give you something out like this, right? This ain't the only thing you're looking at right there, right? You want to use your stacks on stacks on stacks to identify any PD array that can be used, that should be used to support the narrative of price. All right. So looking at um looking at price, all right, we have a bullish fair value gap here, right? Not only do we have a bullish fair value gap, that's also a balanced price range, right? Got a balanced price range. Okay. Well, let's start because you always want to start at your closest point, all right? You always want to start at your closest point. So with where price is here, right? You have um, consequent encroachment of the wick, right? And that's your first uh, PD array. That's your first discount PD array, right? That you're coming to. All right. Then with consequent encroachment of after consequent encroachment of that wick, right? We have the bullish fair value gap, right? Not only is it a bullish fair value gap, it's a balanced price range, all right? Balanced price range there. Let me do it like this so that we can see like the entire ranges. Right. So consequent encroachment of this wick, right? That's the entire range there. Then we got the bullish fair value gap there. That's your entire range there, right? The balanced price range. Okay. That's the entire range there. And then if you look all the way back over here, right, we got an inversion fair value gap right there. Right. Tim, why are you looking at that inversion fair value gap right there? Because this was the first SIBI that was created when we came down and took out sell side. When we came back down here to a discount and took out this sell side, it failed as a reclaimed fair value gap, right? We created the inversion, used it as support, went up, traded back down, took out sell side, and then we came back here for the reclaim, right? It pushed us back down and just created relative equal lows. Then we immediately closed back above it, right? So we didn't use it as a reclaim fair value gap to send us lower, right? So now we're back on top, right? Now that we're back on top, what we're looking for, we're looking for it to act as a reclaimed SIBI, right? And then if we look here, this right here, right? This was our first BISI that was created when we went and took out buy side, right? And then we came down and created an inversion fair value gap and took the sell side. It failed as an inversion, right? So now we're looking for it to act as a reclaimed BISI, right? So once we close there, okay, then we get here on Monday, right? Then Tuesday gave us our Tuesday, and Wednesday gave us our bullish Judas swing, right? So now we've created the reclaimed BISI, came down, respected it, right? Traded down just below consequent encroachment, respected it. Okay. Opened up here, took sell side, right? Repriced the whole SIBI, traded back up, right? Starting our bullish Judas swing, right? Open up here, came up higher, took out buy side, and then started to retrace back down. So we had our bullish Judas swing and then started our retracement through Tuesday and Wednesday, right? So all of that
Tim,
is,
quick question.
yes.
That the Sibby that created right there. Can you also consider that a high probability inversion sets us around 25% of that dealing range? Because it's on top of everything else, or that's not
Uh,
valid.
I mean, I wouldn't look at it like that, but if in the sense of not because it's at the 25%, but in the sense of we're respecting discount PD arrays and it's in the discount, you can anticipate it to become an inversion based off of that. Now, you know what I'm saying? Like with it being at 25%, yeah, we could say, okay, it's around that range that used to create these, but I don't want to throw something out there and people start to take it as the gospel when there's really no, you know what I'm saying? Like certain things are signatures, like that first PD array at a anticipatory reactionary point, the algorithm gonna refer back to it, right? But it's not a thing where, oh, it's always going to refer to this just because it's there. But because we're in bullish order flow, a SIBI created in a discount, you can anticipate it to become an inversion, right? And then once it becomes the inversion, now you're looking for it to act as support. You understand what I'm saying?
Yeah, that makes sense. I was just like, if it was a just even if it was a standalone, like you said, because it's creating a discount and we passed over it with speed, you can
Yeah.
anticipate the inversion. Okay.
Yes. Yes. It's like even before this day here, right? Since we're like when we let's come back to here, okay, right? Even before that day even comes, right? Price drops down, takes out this sell side, and rejects off of it. Now, right, we've come to, and we talked about this, we came down to the discount of a bullish dealing range, right? We created a bearish dealing range. We was talking about we in between the tail of two cities. It's not high probability. We're engineering liquidity. You know what I'm saying? We got to go to the intraday to see what we can do in the short term. Okay. And then now that we've come down, right? We're inside a bullish dealing range. We come down, create a bearish dealing range, and then we reject off of the internal liquidity, right? Because as we're coming down, right, that's the only sell side that's inside this range right here. Once we reject off of it, whenever we reject a low or a high, right, what's the reasonable target, right? The low or high that sent you there, right? So then the next day we come in, right, and we come down and we respect consequent encroachment and fail to take out that low, right? Creating a SIBI. That SIBI is created in the discount. So now since we rejected this low and we're not given a sign of wanting to go down, we got an inside day, right? Remember we was on the lower time frame saying we're inside this bearish dealing range, but we have created a bullish dealing range here. So now we're watching to see if price is going to come back up to the premium to sell for the bearish dealing range, or if this bullish dealing range, this sweeping this liquidity was going to take us back up, right? Because since we can algorithmically plan it out for both sides, nothing is high probability. So if we're looking for a rejection off of here because the higher time frame is bullish, we already said on the weekly, we just stick with bullish because it hasn't been invalidated and we're just consolidating. On the daily, right, we it's bullish and bearish. We can map it out for both, right? So once we see this rejection, now we can anticipate this to become an inversion simply because it's in a discount. Even if it's not going to go back up to this high, right? You don't want to sell in a discount, right? You want to sell in a premium. So you can anticipate that to be to become an inversion, right? And if the algorithm is just super bearish, right? We want to let it show us by hitting it and extending the dealing range before we say, okay, now it's done with all this up here. Now I can trust going lower, right? That's how we want to formulate it as far as, okay, when can I anticipate this? When can I anticipate that, right? But when you look at other things like, okay, we create our first imbalance when we go into taking out all-time highs, and now we, you know what I'm saying, we create an inversion here, right? Now we can look for that to act as resistance, right? Because, you know what I'm saying, that's I like to call it the high probability inversion, right? That's when I can anticipate, same thing, I can anticipate this to be an inversion because it's the first, but also I can anticipate this to be an inversion because, right, it's all the way up here in the premium of the move, right? But the only difference is this got that added influence of being the first, and the first is something about the first, right? Hopefully that ain't confused nobody, right? Where was I? Okay. All right. So once we got our right, once we got our bullish Judas swing here, right, and we retrace back into the discount on that day, right, we can see that price, right? This why I said, when does this, right, become invalidated? Because we came down Judas swing and we traded back down to the discount, then closed up here, right? So we can see we're still respecting that. We're still respecting this here, all of this right there, right? The balance price range, the BISI, we're still respecting all of this right here, even that over there. All right. So now you should be looking for reasons to buy or look for reasons to price to continue to be supported, because until, right, until we trade back down here, right, we have not created the wig snatcher, right? Because the wig snatcher is going to come down, take out liquidity, go up, take out liquidity, and then come back down again, taking out liquidity with some displacement, and then you're going short there. So since we didn't come down and take out this liquidity with displacement, right, you should still be treating this as a bullish Judas swing until this daily candle comes down and takes that out, right, with some authority. Okay. Like how we went back up with that authority, right? So that was the answer to that. Once we come back down here, right, with some authority, and then as you see here, what did we say the first PD array was? Right? What did we say our first PD array was? Our wick. And look where price went to. The low of the day was right there, just below consequent encroachment of that wick. Came down and made the low of the day right there, right? And what are you looking for? You're looking for discount PD arrays, right? You're looking for discount PD arrays. Now, I shared something else, if I'm not mistaken. If I'm not mistaken, let me come here. I really didn't plan to talk this long. That's the Judas swing. Oh, that was that. Oh, this right here. Screenshots. This was the one I shared this morning. I shared this morning at 9:12.
Can't
right?
see the screen.
The whole time I've been talking, y'all ain't been able to see my screen the whole time I've been talking.
It was up for a little while and then it went away.
Hold on. I'm looking at the screen now. I can see the screen.
Oh, I'm in Zoom. Maybe I'll go to YouTube and see
Wait a
it.
minute. No, I'm sharing it in Zoom.
It's been up in Zoom for me.
Yeah, I'm looking at it in Zoom. Swipe it. If you're on your phone, swipe it to the side.
It's up for me too in Zoom.
You on your phone, Rhonda?
My bad. I had to swipe.
So you ain't seen the screen at all when I've been talking to you? Or you say you saw it earlier.
I saw it earlier, then it went away.
Okay. All right.
User error, sorry.
All right. Okay, so I shared this morning, right? At 9. Let me I can't draw on it when I'm in there. Let me see if I can. Oh, yes, I could. Yes, I could. I didn't have to do that. All right, I could have just did it right there. I didn't have to download it. All right. Okay, I shared this morning. Since I already downloaded it, I guess I'll open it up. So I said, remember to look at the chart like Ant-Man when looking for liquidity. Pay attention to where price is currently trading near. All right. Is there anybody who did not understand that? Was anybody confused when I shared that? Right, with this screenshot right here. Was there anybody that was confused when I shared that? Were you confused about um um was you confused about it at all? Or did you understand what I was saying? Oh, okay. That's the Ken. That's the Ken who that was. Cookie just can you explain it? Cookie just sent the text said that was Ken from What Manners Lump. I understood it. But Deborah said she understood it. So if Deborah got it, I ain't got to explain it. I ain't got I'll just play. I'll just play. So right. Uh I said a couple things in there, right? I said look at look at the chart like Ant-Man. Right. You understand that, right? You understand what I mean by look at the chart like Ant-Man. I'm sorry it's taking so long, y'all. Here learning shell wanna type in the chat. She won't get on the Zoom and then unmute and just talk. I got to wait this 4 second delay for her to type. Then I got to see it. And I got to sit here and be like, oh, looking through calendars. Oh, yes, okay. All right. So then I say pay attention to where prices currently trading near. Do you understand that? So if you understand both parts of both of these sentences, what you want me to explain? No, Deborah, you're not the dull pencil. You're not dull at all. You're an RN. What do you what do you want me to explain? That's a serious question. Cause you say you know what the Ant-Man part is, and you say you understand what I mean. Just trying to make sure I understand. You know what that sound like? You know when you be talking to somebody about something and you be like, hey, you ever seen Harlem Nights? And then you be like, yeah, I seen Harlem Nights. You be like, what's your favorite part? And then they only quote stuff that was in the trailers. They can't tell you nothing else about the movie. Be like, yeah, but tell me something that wasn't in the trailer. But they can't tell you. Oh man, I can't. I really can't remember it. I saw it so long ago. That's what that sound like. That's what that sound like for real. Stop the cap. All right. So whenever you're going into, you know how we always say, going into a new anything, right? Whenever you're going into a new anything, we look back at that previous thing for liquidity. All right. Last night when the market closed, Nvidia or somebody, big tech somebody had earnings, right? And then we see here the market swept buy side, the market swept sell side, right? Cleared out both sides of the board. Okay. And then when price started trading, let me um let me get out of here and go to my chart. Cause that picture gonna get on my nerve. Where'd my picture go? Close it. Cause that's gonna drive me crazy trying to bounce back and forth. All right, so up, down, up, down, up. Not coming down. And it was going back. It was here. Up, down. Okay. All right. Okay. So coming into, I actually need that picture. I actually need the picture. Whoops. I'm sorry, y'all. All right. So all right. So yeah, hold on for a second. All right, I'm back. Test, 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 test. All right, I had to make sure my mic was working. Okay, so, oh, uh, let's see here. Okay, all right, so I got everything laid out like it was. Okay, so, all right, going into, right, like we said, coming into a new anything, right, we look back at the prior thing for liquidity. All right. But damn, why are you looking at this low and this high and this low and not looking at this low and this high? Right. Who can tell me why I'm looking at that low and that high? It's on the screen. Who can tell me why I'm
Is it
looking?
because it was that consolidation range before we expanded each?
Nope. It's on the
Oh
screen.
wait, I can't see. Hold on, I'm on my phone.
It's on the screen.
Sell side. It's PM. Oh, it's previous session highs and lows.
When I put it on regular trade now, that's all you had to say, regular trade now. When I put it on regular trade now,
Man, yeah, about 50 things on the screen. On my phone.
I ain't
Okay.
had nothing up there that said previous session highs and lows. I ain't had nothing on there
It
that said
says
that.
sell side liquidity PM. But it's I know what it is. It's regular trading hours. There we go.
Okay. Yeah, thank you. All right. So if I turn on regular trading hours, right? Buy side, sell side. Right? Buy side, sell side. And price is trading right here. So I go back to regular trading hours, buy side, sell side. Right? That's what I mean by be like Ant-Man and look through the candles. Right? Right? Be like Ant-Man, look through the candles and understand based off the fact that we're coming into a brand new New York session, right? Prices trading in between the afternoon high and low, right? Because we come over here to 1:30, right? That's our afternoon right there. That's our high of the afternoon. That's our low of the afternoon. We're coming into the next session based off of the New York time, right? Well, Tim, what if price was trading right here below the afternoon? Okay. If it's trading below the afternoon, you go to what do we do if it's trading below or above the London, right? What do we look back to? Hmm? If we're talking about extended trading hours, what do we look back to? If it's trading above or below the London, we can't look for liquidity above and below the London. What do we look back to?
The Asian.
The Asian. All right. So if we trading below the low or above the high of the afternoon, right? If we trade here, right, we look back to lunch. If it's below lunch, we look back to the AM, right? You just look back to whatever the stuff don't go stale. So that's what I mean by wherever price is trading near. Where's price trading near? Right? Price is trading here. What's there? So we look there and there for possible liquidity sweeps, right? That's based off regular trading hours. Okay. Based off off extended trading hours, we have pre-market high, pre-market low, right there. Right. What Michael teach? The lowest low, highest high from 7 on, right? That's what we're watching as we go into the session, right? So based off of extended hours, we're in between the pre-market range, right? And we're in between prior session range, right? Now, we said that the bullish Judas swing was not invalidated, right? We said that the bullish Judas swing was not invalidated. Okay, so we come here. Uh-oh, wrong spot. Come here, here, and traced back down, right? Now, see if we can find them lines that are true. All right, there they go. Okay. All right, so there we go. Now, All right. So that's we dropped down, took out the sell side. Right. We dropped down. Price came down. Uh-oh. Price came down, swept sell side. Right. Took back off, swept buy side, consolidated a whole bunch, then dropped down, right, and retraced back down. And we end up closing up here somewhere, right? Closing back up here somewhere. Well, we closed that. Then Nvidia, we did that. Okay. So let's look at price pre Nvidia. Let's just go to regular trading hours first. Nope, I can't because I'm gonna miss some stuff. Let's just go pre Nvidia. Still got to go a little bit more. All right. That's how we closed. Right. Came down, right? Went to the discount and pushed back up and closed there. Right. So Judas went bullish Judas swing, retraced back down to a discount, pushed up and closed here. Well, before closing there, we pushed up, took out the high again, right? Came up here, took out this high. Right there. Came with the took out that high right there. Right. Came that took out that high and then retraced back down. Right. And then retraced up. I mean, then bounced back up and closed there. Well, somewhere around here. Yeah, closed there. Right. That's what we closed at right there. All right. Now, got it good. Now we got a good handle on where we was at. God dog it. I know it's gonna do that. All right. So now going back to when I sent out the screenshot. Everybody tracking, everybody with me now. Everybody on the same sheet of music. Anybody that's still lacking. Okay. Now, coming in, Ant-Man. Oh, I'm on the wrong thing. Is he not in here? I don't think he in here. I think he was in the I think I was just using like a text box. Was I just using a text box for Ant-Man? Do they have a search? Man, I wish they had a search feature. I wish they had a search feature. Animals. I see a cricket. Is that an ant right there? That's a spider. No, that's a spider. It ain't no good. Oh, that's an ugly ant. That ain't Ant-Man. No, sir. No, sir. That ain't Ant-Man. No. That is not Ant-Man. That's Ant-Man right there. Oh, man. Get out of here. I don't know what that is. All right. So Ant-Man, he's looking back through price, right? And he sees that high right there. And he's looking back through price and he sees that low right there, right? That's the afternoon high and low. Okay. Ant-Man understands that we're in a bullish Judas swing, right? We're in a bullish Judas swing. And until we trade down here, right, it's not the wig snatcher, right? It would be a bearish wig snatcher if we trade it down here. So since Ant-Man understands that, he's looking at price, right? Where we at, right? So this morning at 9:12, when I sent this out right here, right, said, know where you are, be looking for liquidity. What did I can't find my, right? Remember to look at the chart like Ant-Man when looking for liquidity. Pay attention to where price is currently trading, right? That's this morning. So let's walk back through it, right? Class participation last night at 6:10, right? Here's something for everybody to think about for the rest of the week. Think about what we said about the high time frame, like the weekly and daily, and identify when this move invalidates a bullish Judas swing and a Judas and becomes a wig snatcher. Also, know what the reasonable draw is in either scenario, right? And then this morning, right, I said, when does the Judas, so you're getting your mind prepared. We got a bullish Judas swing. Okay, when a bullish Judas swing, I should be looking for support areas where I can buy off of. The invalidation point is when this Judas becomes a wig snatcher. So until it get invalidated, I need to be looking for somewhere to buy off of a discount. All right, y'all tracking? Y'all tracking? I know I don't spell everything out, but we sprinting right now. Okay. Look where price at. This is your liquidity. If, right, if you are in a bullish Judas swing, what would be the ideal scenario as far as before you start looking for entries? What do you want to see happen first? Manipulate sell
bullish,
side.
yeah.
Thank you. Manipulate sell side. All right. All right. Where are we looking for sell side at? All right. We're coming into a new session. We got the afternoon right there. Why? Because we're trading inside the range of the afternoon. So we got buy side liquidity. We got sell side liquidity from the afternoon, right? We're trading inside of the range from the pre-market, right? From the pre-market. Yes, this right here is the 9 o'clock candle. We still haven't opened yet, but this is what it is right now. If something changes, guess what you do? You just adjust it. Now, you're not going to change this. This is etched in stone. This and this is etched in stone. This and this can still change before, because it's not 9:30 yet. All right. Right there. All right, it's not 9:30 yet. 9:30 would be right. Y'all probably can't see that line. Right, 9:30 would be right there. Right, so until 9:30, this and this can still change. Right, but for right now, that's what it is. If it makes a little bit higher high, you change it. If it makes a lower low, you change it. But wherever prices trade, and then this is my prior session liquidity. This is my pre-market liquidity. Okay.
Okay. Just so I can understand. Like you said, that's not gonna change. So even though extended hours appears, so to speak, to have taken that, because it was a regular session, true liquidity, the algorithm will still be drawn to those areas. Correct?
Yes. Yes.
Okay. All right.
Yes. Exactly. Same concept with the opening range gap. Looking at extended hours, there's no gap there. But when you put it on regular trading hours, there's a gap there. It ain't always, but you get what I'm saying, right? That's why we refer to the opening range gap, because it's a gap between the New York sessions, the difference between the close of the prior day's New York and this day's New York. That's your opening range gap. Now, if you look at it in regular, extended trading hours, you don't see, I'm pointing at my screen like y'all can see it. If you look at it here, there's no, like, I will talk about it when we get to it. But when you look at it there, it won't look like it's a gap. But when you put it into regular trading hours, because when I put it into regular trading hours, right? See that? Where's that line right there? Stop right there. I kind of had it a little off. I said we closed there, but we actually closed there. Right. It was on the low of the candle. Right. There was a whole lot of trading after that candle right there in the extended hours. But for regular trading hours, that's the last price that was offered. Right. And so right now, you see how Ant-Man can see that so clear. When I take away the extended hours, Ant-Man right up against that. Right, look at that, the little line there. Let me put it back. Let me put it back on extended hours. He well over here, right? Ant-Man well over there. But when he put on his Ant-Man glasses, right, he can look through them kind of. It look just like that to him. You know what I'm saying? So, looking at the regular trading hours, liquidity. Why? Because we're trading inside that range. Just like we always say, the PD rates don't go stale. Anytime prices trading near a significant algorithmic PD array, it's not going to go stale. It don't matter if you're focusing on this high. It don't matter if you're focusing on this high. It don't matter. That low. It don't matter if you're focusing on that low. It don't matter if you're focusing on it. No, what matters is there is the algorithmic time from 1:30 p.m. over until 4, if I can get right, 1:30 over until just right here. This little window right there. Right? That's an algorithmic time. That's the New York PM session. Right? So Ant-Man knows that we're trading inside that range. There's viable liquidity there and there based off of time. Because for a 9:30 morning session, nothing has violated this buy side and sell side yet. Time and price. Now that we've beat that horse to death, right? Let's put some more meat on the bone. Right. Put some meat on the bone. That's good. What time is this right here? That's 1. That's fine. We'll just go up to noon. We'll go up to noon. We ain't got to go like all day long. Go up to lunchtime. Right. Right there. We'll go up to lunchtime right there. We ain't got to go all day long. All right. Now, as we come into 9:30, right? As we come to 9:30, what do? Price takes off straight to the upside, blast off at 9:30, right? We'll go down to, we'll stay here on the 15-minute time frame. We can go down for some detail, but we're just going to talk about it on the 15-minute time frame, right? Right. So at 9:30 here, price takes off, goes up here, makes a high. Where does it trade to? Right. It trades straight up to our prior session high, right? And it takes out our prior day high, right? Take it out straight to the upside, right? We're in a buy program. When price takes off to the upside at 9:30, what are we anticipating this to be? The true move or a fake move?
The fake move. That'll be the manipulation.
$102 for gold shoes. Okay, yeah, right. So we're looking for this right here to be a fake move. right? And if we're looking for that to be a fake move, we anticipate this to be a Judas, right? So if we anticipate this to be a Judas, all right, we're anticipating that to be a Judas. If we anticipate this move to be a Judas, what else are we anticipating this to become? Because we're bullish. Anybody?
A new high.
Wig snatcher. Very good. Since we're bullish, because we already had a bullish Judas swing on the daily, all right? And we're looking for reasons to buy in a discount, all right? We're looking for this right here to be a fake move, AKA a Judas. And if we're looking for this to be a Judas, what do we want to see? We want to see it come up, take out the buy side, then come back down and take out sell side. All right. So what do we do here? We go up here, right? Trade into that high right there, trade into that daily high right there. Then we reverse, come back down and take out that low right there, right? Once we take out that low right there, what does price do? Price takes back off again, right? Taking out that high. What did we just get? Boop, boop, boop. Wig snatcher. Price trades back down into the imbalance, right? Touch the order block, bullish order block. And then we already saw throughout the rest of the day, it went up like that, right? Coming up here, making the daily high right there. Right, came with that, made the daily high there. Okay. So we had our sell side, we had our buy side. That was from the prior session. We had our sell side, we had our buy side. That was from the pre-market. Right. Price came in, chose the buy side first. Right. So since it came in and chose the buy side first, now, right, we want to see that stay in place. Right. We want to see that stay in place. We don't want to see that taken out. Right. We don't want to see that taken out. Why don't we want to see that taken out? Because we have internal liquidity here. Right. We got internal liquidity there. Okay. Looking at it like this right here. Price came down. Right. We had a high. We had a low. Right. Price came back up. Made a new high. So now what do we have here? A bullish dealing range, right? What do we have here? Internal liquidity. What we don't want to see. We don't want to see it trade outside of our bullish dealing range. That's not conducive of a low resistance liquidity run. That's more of a, seek and destroy, right? That's more, it's like giving you conflicting signals. Okay. So you want to see that stay in place. All right. And then once you come down, right, you come down, sweep that liquidity and don't take that out, right? Sweep that liquidity and don't take that out. And then we displace back up. Now you got your imbalance here that we retrace back into and go. All right. Now we go down into the weeds. We go down into the thick of it. Go down into the thick of it. Who used to look at the backyard against with their kids? Into the thick of it. Into the thick of it. But we can't see where we're going. All right. So we come here at 9:30. This is our 9:30 open here. Blast off. Boom. Right. There's our pre-market high. There's our prior session high. There's our prior day high. Right. We've gone through 1, 2, 3 time frames of liquidity. Right. Pre-market, prior session, prior day. Gone through 3 time frames of liquidity, all in 1 minute, right? That's a 1 minute candle right there. All in 1 minute, take off to the upside, right? Come up here, drop down there, make a low, go back up, fail to take out that high, drop down, boom, make another low. Now we came down into that imbalance, came down into it again, right? Failed to go up, came down into it again. We inching our way back down into this imbalance, right? Showing you that it's not willing to just take back off, right? We keep digging deeper and deeper and deeper into this imbalance, right? And then we come down and we finally drop all the way down here, right? And we get there to that pre-market low, right? We get into the pre-market low. So now we've taken out our pre-market high, right? Our other liquidity we was watching. Now we want to see that stay safe. Why? Because this is the low of our dealing range, right? Remember that was the low that we set and we've extended the high, right? Internal liquidity there, right? Internal liquidity there, pre-market low, right? That's the opposite side of this right here, right? So when we just watching our pre-market, what we would say, if we take out the buy side, right, we can look for a reason to sell it back down to the sell side. If we take out the sell side, we can look for reason to buy it back up to the buy side, right? That's how we trade the pre-market, right? But in this case, we ain't thinking about the pre-market. We thinking about our bullish Judas swing on the daily time frame. We want to see sell side liquidity manipulated before we look for reasons to buy at a discount, right? When we come back down to that sell side liquidity, right? What's resting right there with the sell side liquidity? A new week opening gap, right? Got a new week opening gap right there, right? So now we're dropping back down to the new week opening gap, right? We're above it in a bullish Judas swing. So we're anticipating that to act as support, right? This is our low of our dealing range. Don't want to see that taken out, right? Took out the buy side pre-market. We've come back down to the sell side pre-market. Now that we've taken out the sell side pre-market, right? What do we have here? Boom. A bullish breaking market structure right there, right? That high right there took out that low, and our pre-market low. What's that? 2 levels of liquidity, right? The liquidity there and the liquidity there, right? 2 levels of liquidity. Once we come back up here, right? Once we come back up there, what do? We retrace back down into that new week opening gap one more time, and we take off, right? So looking here, right, on the 1 minute time frame, you have the opportunity to trade off of a implied fair value gap over here. If you understand implied fair value gaps there, all right? If you understand implied fair value gaps there, because here, what do we get here, right? We got an immediate rebalance because we traded back up into there and came down and took out the low right there, right? got immediate rebalance there. So if you look across there, right, there's an implied fair value gap there. We retrace back down into the implied fair value gap, right? What do we have right here? We got a propulsion block right there. Why? Because this is our bullish order block right there, right? Once we trade back above that price right there, that's our change in the state of delivery. We got an order block inside of an order block, right? We trade back down to the implied fair value gap, back down into the propulsion block, right? And we touch that that new week opening gap one more time, just adding insult to injury. Why you say insult to injury? Because see the time of this candle right here, that right there is a 10:05 candle right there, right? That makes this right here a 10:04 candle. That makes that a 10:03. Y'all get what I'm saying? We're inside of the macro time right there, right? So if we come over here, right there, go over to 10:10, there. Boom, right? It's our macro time here. Open up there, we drop down, right? Take out that sell side, trade up, drop down, take out the pre-market sell side, completing this move right here, right? Buy side to sell side, okay? Once we do that, right, we turn around and we get a change in the state of delivery, right? That's signaling that that low should be protected, right? Now you getting a signal that that low should be protected there. What else signals you getting, right? Here, since we got this immediate rebalance, right? Our first imbalance that we would have created there and created an inversion here, being our high probability inversion fair value gap, we got an immediate rebalance. So now if you look at our implied fair value gap, for those of you who don't understand implied fair value gaps are when you get an immediate rebalance, you got a large expansion candle, but the candle on the left and the right, the wicks overlap, right? You take the consequent encroachment of the wick on the left, consequent encroachment of the wick on the right, that's your implied fair value gap. So there's your implied SIBI, right? We create an inversion. What is that? A type of change in the state of delivery. We get our actual change in the state of delivery, right? We trade up, right? Come here. Don't touch that SIBI there, but we create these little relative equal highs there. We drop down into our implied fair value gap, into the propulsion block, and then here we open up one more time and drop below that low, just to add insult to injury to anybody on a lower time frame that put a stop there. Yeah, hold on one second. All right. But yeah, we came back down into that area there. So if you know what I'm saying, understand anything about order blocks, propulsion blocks, implied fair value gaps, even trading off of this order block and this bullish breaker, right? Everything, your stops are all down here. So anything in here, bullish breaker, implied fair value gap, um, order block, propulsion block, new week opening gap, anything in here, right? Your stop is down there. Now, remember when I said that your implied fair value gap here, right? Once we get that inversion, right? What we say that's a type of change in the state of delivery, right? The change in the state of delivery, a break in market structure, all of that right there is giving you more and more confluence, right? When we create this swing low right there, right? That right there is the signature you're looking for to say, yes, that is a protected low, right? Can anybody explain to me why that is? We sprinting now.
Smiley face.
There you go. There you go. Right? Because once we make that low right there, we got our little man there. And now that right there is an important low. We just created an intermediate term low above the low that we're anticipating to be protected. So now that swing low right there, that's your confirmation to say, yes, I'm on the right side. Phil can go in and hit the button and wipe you out, but these are the signatures that we learn to look for throughout time, throughout history. And there's a high probability that I'm on the right side when I see this right here. Right. Remember, I told you, y'all this little man right here, that little man right there gonna be etched into y'all brain. I bet until y'all start looking at Tim's tidbits, y'all never picture a little man. Don't tell me it don't look like a little man smiling down there. Tell me it don't. But y'all ain't never seen that right now. Right. So that lets you know I'm on the right side, right? And once that lets you know I'm on the right side, here we go. We come up here, right? And we do around, right? We're just sitting here stalling around. What are we doing here? Right? We're engineering liquidity. Where is that happening at? Where is that happening at? Remember that buy side there? Remember that buy side there? What is this right here? That's a break. And let's do this right here. Let's come here. I'm just going to chop it off right there. And I'm going to put this back on regular trading hours. All right. Now it's on regular trading hours right here. Right? Remember, this was the buy side we was watching right there. So what is this right here? That right there is a bullish breaker. Remember that breaking market structure? Remember what we say? When price gets to a breaking market structure at a bullish breaker or a bullish mitigation block or bearish breaker, bearish mitigation block, it's not uncommon for price to sit there and engineer liquidity. What is it doing? Engineering liquidity right there on that breaker, right? Sitting there engineering liquidity right there on that breaker. And so now people who are on the wrong side of the market, right? That's good enough there, right? People who on the wrong side, people who aren't looking at price correctly, people who were fooled by the bearish Judas swing, right? Guess what happened to people right here? Somebody tell me what this is, right? What am I highlighting right here? That is what when price come right back there. If you sell this, what is that right there? What is that?
Balance price range?
Mm-mm.
Which
Mm-mm.
one? Which one you talking about?
Right here. When price came here and you went right there, if you sell that, what is that?
It's
You lower
IOFEV.
sell.
Mm-mm. Mm-mm. Who knows? Somebody tell me now.
If you sold it from there,
If you sold it right here, price came here, dropped there, right? Gave you a bearish Judy swing if you sold right there.
is
Right?
that an
What it
institutional order flow entry drill?
mm-mm,
Oh
mm-mm,
Lord. Retrace. Oh,
mm-mm. It's a model. It's a model.
make money. No.
It's a model.
A model. Okay, we
Price
ran
took
out
out
of
buy side, took out
bearish
sell
units.
side, gave you a bearish Judy swing, traded back
Mm-hmm.
up into the civvy. Right there, that
Oh,
bearish breaker.
we continue for the complete the sell model.
Oh my God.
Oh God, you're right. Exit
It's
stage
a
left.
model. It's a model. It is a unicorn, but it's a very famous model by a very famous person. But if you don't understand order flow and price delivery, you will get slapped upside your head. The model 2022. That is the model 22 spelled out, right? At 9:30, price goes up, takes out. Your mama going to get your food, Timothy. Was trying to tell you that, but you had your headphones on. I figured you was gonna come out the room once you start smelling that good old chicken. Right. So take out buy side, take out sell side, sweep liquidity. There's your Judy swing, right? Happening at major liquidity, a daily high, right? Trade back up. We're treetop tall. It's got to go down now. Sell off that. Guess what happens? You got busted your head because you're just looking for a pattern. You're just looking for the bears Judy swing and trying to sell. Look for a pattern. I just threw that in there for free because that is the 2022 model, perfect to the T. Right? That's your 2022 model, perfect to the T. All right. Now, when we came back up here, we start engineering liquidity. Right? Price is engineering liquidity right here. Okay. We're bullish. Okay. Which price engine model would be ideal at this time right here? Now that we've got our change in the state delivery, right? All this right here, we weren't able to identify anything down here to buy off of because we didn't see the implied fair value gap. We didn't know, we didn't have our weekly new week opening gap marked out, right? We didn't catch anything in here, right? So now we see our smiley face and we understand that's a protected low. And so now we're looking at this dealing range here, right? That we came down in and we're anticipating price to reverse, right? So now that we're anticipating price to reverse, right? We get a bullish break in market structure there. So now we're watching each time we make a higher and higher high, right? So we came here, right? Made that, came back down to a discount, right? Went up, made a new high, right? We start engineering liquidity, right? We made a new high right there, right? Engineer liquidity. So now we're looking here. We're like, hey, look, this right here, this can act as a balanced price range right there, right? Because we left that area. So now I'm going to look at this leg right here. I'm not going to look at the lowest low. I'm going to look at this low there because that's the low that left that area, right? In this case, it did come back to a slight discount, right? It did come back to a slight discount, but once we leave the balanced price range, right, we're focused there, right, on the range that left the unbalanced price range. Okay, so now we're up here, right? This is our dealing range. We're engineering liquidity, right? So while we're up here engineering liquidity, y'all still ain't answer me. What price engine model? I didn't say delivery method. I said what price engine model would be ideal here. Somebody said CERRB. What price engine model would be ideal here while we're engineering this liquidity right here? Don't nobody know? My Popeye smelling real good right about now. Valentine said, I don't know. Come on. How many price engine models are there? You mean offset VS? What's VS? What's VS? Y'all sleeping?
Is it you talking about a sell model and that's the offset accumulation?
Why you gonna throw a sell model out there?
I mean a buy model. Buy model, sorry.
Why you even throwing the buy model out there? I said what kind of price engine model you looking for right here? If we consolidate in there, what price engine model you looking for right there? Why
Is accumulation, manipulation, and back to distribution? But you said a price in your model. That's not a model.
you say offset distribution or all right, I'm hungry. It's offset accumulation. You're looking for offset accumulation, right? Why? Because we come up here and we start engineering liquidity right there, right? So since we're engineering liquidity here, right, and we're looking to go up, we would like to see offset accumulation, meaning take out sell side, right? Why do you want to take out sell side? Because it's going to give us opportunity to come back to a discount, all right? What else does that look like? Yeah, I'll be like, man, Tim be trying to make me think too much. Tim be trying to make me think too much. Y'all remember this little thing right here called institutional sponsorship? All right. This little thing here called institutional sponsorship there. All right. Y'all be like, oh my God, this stuff is all connected, right? We consolidate in here, right? We're looking for offset accumulation, right? So if you look for offset accumulation, you want to see it take sell side, then move up above buy side, then retrace and let you go, right? That's offset accumulation. Reaccumulation would just be consolidating, expanding up, then retracing back, right? Sorry, y'all. I got a lot of stuff going on right now. But so looking at where we are, we're consolidating here. Where are we consolidating? We're consolidating in the premium of the range that we just created, right? We're consolidating the premium of the range that we created. Okay. So looking at the imbalance that we created in this range, where's that imbalance? That imbalance is resting in the premium, right? It's just above equilibrium, right? So we're sitting up here, right? Engineering liquidity here, right? And then we come over here and we drop down into a discount, drop down into sell side liquidity, and we also come down into an area of support, right? We're coming down right here into this order block right there. We're trading down into that bullish order block. So when I guess I closed it. I guess I closed it. Oh no, I didn't. Right? Long setups move to a discount or sell side liquidity run. Right? You want to look for buy side liquidity left in the market. Right? You got high time frame displacement and you got time of day influences, right? All of that stuff there. Right? So we got everything that's playing into our favor, right? Everything playing into our favor. But even on this lower time frame, we can see it consolidating. We move to discount. We move to sell side liquidity, right? And then, right, we displace up, right? Taking out that high, retrace back down, right? What do we retrace back down to? Right. All right, right. We come back down into a discount, but just for completeness sake, here, we got here, 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 then here, right? That low is an important low now, right? Then we trace back down into the discount, into our abyssy, and we go up, back into that high, go up, go up, go up, right? So if you miss something down here, right, no harm, no foul. You got all the signatures that's showing you that that is a protected low, right? Implied fair value gap, inversion, change in state delivery, bullish breaking market structure, intermediate term low, all at a key area of support. That's protected low, should not go back there. So when price comes back, right, since that's a protected low, should not go back there. This is an intermediate term low, so that low is important now, should not go back there. So when price comes back down into the discount, right, you can buy that order block right there, right? You can buy that fair value gap. You stop still down there, order block, stop still down there, right? You can buy that fair value gap. You can buy that order block, right? Once you come down here, what you do, you make another intermediate term low and displace up, taking out that high, come back down. You can buy that fair value gap, right? You can buy that order block right there, right? Then price starts to go up, right? The more it gave you a chance there, but the more it move, the less opportunity you're gonna get to participate, right? But that's all I got. Tired of talking. My food smell good. About to go. Hopefully y'all learned something in this. Right. If you found
This is
this
a
out.
great unexpected pop-up. Appreciate you.
Yeah. I really didn't expect. I really didn't plan on talking this long. I ain't gonna hold you. I did not plan on talking this long. I hit something. I don't know. I'll figure it out later. All right, but hopefully y'all can see how this stuff ties together based off the I look around the map. That's a fire ant right there. I wish I had that ant on the other one. Hopefully y'all can see how the I'm looking at y'all like I need to look right here. Hopefully y'all can see. Don't be looking for my screen now, Rhonda. It's gone. The screen gone. Hopefully y'all can see how this stuff ties together. I I shared some stuff today, right? Based off of what the market was presenting. If you wasn't able to identify it then, don't beat yourself up. You just you go back through price and you study the price based off time and price, right? Be like Ant-Man. If you don't know what to look for, don't beat yourself up, right? If you haven't grasped it yet, don't beat yourself up, right? We've said it over and over and over, but everybody don't learn at the same rate of speed, right? But just remember, focus on time and price, right? The PD rates don't go stale. What am I looking for? Look back to the prior whatever, right? And price is fractal, right? From the highest time frame down to the lowest. Understand what the higher time frame is saying, right? What the higher time frame is saying, that's what's going on. We go down and we look for the details. What are the details showing? Are the details showing that I'm still sticking with the higher time frame? Are the details showing that I'm starting to change the higher time frame's mind? Right? Understand your invalidation points until it sweeps that liquidity that invalidates whatever just happened. Stick with what just happened. Stick with what happened. If it don't invalidate it, stick with what happened. Well, tell them getting deep retracements. I don't care. Don't try to predict the reversal. Don't try to predict, oh, it's not gonna take it. Let it show you. Okay, and look for the signatures. Okay, we swept liquidity. We did this. We got to change the state of delivery. We got to break in market structure. We got, you know what I'm saying, an intermediate term high. We got a high probability fair value gap that was created. We look for the signatures. You know what I'm saying? That's all I got. Appreciate y'all, man. Remember, um, if you don't remember what I was talking about the schedule, go back in the beginning and rewatch it. I was talking about the schedule for the rest of the week, and what tomorrow the last day, but for next week. And then yeah, I'll see y'all next week. All right, y'all enjoy the rest of y'all evening.